Welcome to the Communicating Capital podcast, where finance and communication get a fresh perspective. Hosted by a dynamic team of women in the industry, we're here to redefine the conversation with candid, no-nonsense interviews featuring top executives, communication experts, and industry leaders. Whether you're a seasoned professional or you're just interested in our world, we're here to navigate the space in new and exciting ways. Today, I'm joined by two visionary leaders who are redefining financial media and investment access. Todd Goldberg and Darren Marble, co-founders and co-CEOs of Crush Capital. Crush Capital is pioneering interactive financial media, creating shows like Going Public, where viewers can click to invest in featured companies in real time. And now with their newly announced partnership with X, they're taking financial media to the next level. Todd, Darren, welcome to Communicating Capital.
Thanks, Jessica. Great to be here.
Thanks for having us, Jessica.
We're so excited to have you. I'm just going to start with the big news, the exciting news. Crush Capital has secured a landmark partnership with X to stream Going Public and expand financial content on the platform. Can you both tell me how this went, how the deal came together, and what does it mean for the future of your media empire?
T, open us up, baby.
Oh, all right. Well, we were lucky enough to get a really big introduction to the CEO of X, Linda Yaccarino. She was attending a gala in Dallas, Texas. We ended up meeting her there before the gala began. We had about an hour booked with her. Within the first 2 minutes, she said, I get it. We want it. This is going to be the marquee business show on X. I love the fact that the viewers can participate. X is the global town hall. This is totally aligned with our pursuit of all things free speech. And we worked out the particulars in the next, 6 or 7 minutes, and then just built relationship. And so far, the team has just been phenomenal to work with at X. It's a small but really mighty team of industry veterans, from the content world. Obviously, Linda came from NBC, built Peacock for NBC, one of the more successful streaming platforms, and now is taking, the approach of produced content onto X. And we couldn't be more excited or more thrilled to be working with such a solid team.
That's so huge. And Darren, what does that mean to you to be able to be working with X in this capacity?
Well, I'm a super user of the platform. So I've been on X for many, many years. And I've been able to watch the innovation unfold and the acquisition by Musk and the laying off of a lot of people, and just seen it through, a number of big transitions. But what I love about the platform is that you can post something and less than a second later, 100 people have already replied. So it's the most real-time social platform on the planet. And that's what makes it so unique. And the nature of our show is that it's interactive. Viewers can click to invest and buy shares. So the idea that they can not only interact and buy into the featured deals in this show, but they can also have a real-time, authentic conversation about the series, the deals, the talent, the celebrities like Ninja, Steve Aoki. That's what makes this partnership most exciting. And, I echo Todd's sentiment. We worked very hard to secure a meeting with Linda Yaccarino. We intentionally set our sights on having, the sponsorship from Linda, who's the CEO. And she's been phenomenal. The team's been great. So season 3 we're wrapping up production. It's going out on May 6th. It's 5 episodes. Episodes will drop every week, every Tuesday. And then the 5th and final episode, our finale, is going to be live streamed on X, a 90-minute live stream with the stars of the show. And that will be, of course, on the X platform. So we couldn't be more pumped about it.
I cannot wait to tune in. May 6th is actually so soon when you think about it.
Is.
So I'm excited for that. And Darren, I'm just going to continue on with you. You've been so vocal about disrupting legacy financial media. Can you tell us a little bit about what's been broken in the way of investing or financial news, and how is Crush Capital deciding to disrupt this narrative?
Well, I think there's a few things. I think, for starters, legacy financial media tends to focus almost exclusively on public markets. So if you are a person that wants to buy stocks and bonds or trade options, sure, you can watch CNBC or Fox Business or, read the Financial Times. But that's really not a very exciting aspect of the market anymore, especially for younger people. Younger generations are much more interested in alternatives, venture, startups, real estate, fractional ownership, crypto. So that's where kind of the puck is. And we're skating to the puck with, this studio model where Going Public is show one, Kingmaker with Phil Hellmuth and Chamath Palihapitiya is show two. So there's multiple interactive investing shows, but they cater to a totally different audience than legacy financial media, which is, alternatives, private markets. The other thing I would say is that their shows are stale. The formats are stale. They're boring. They're old. The legacy format is not interesting. Jim Cramer has become a meme. You're going to make more money doing the opposite of what he recommends. And he's the star of CNBC. So, one of the biggest legacy financial networks, the most notable person there is a guy who is known online for his absolutely horrific calls. They should have fired that guy years ago. That's who they're propping up as the face of the network. So there's an opportunity for us to come in with new talent, fresh faces, and a very critical focus on the most exciting aspect of the markets, which are private markets.
Love it. I'm excited to tune in and see the new faces that come in, especially on the private market side. There's so many different companies there. Todd, I'm going to flip it to you. I read that Going Public was your brainchild and inspired by your own experience taking a company public. What frustrated you during the traditional IPO process, and how did that lead to this entirely new model?
Yeah, the biggest frustration was that I worked in medtech for a number of years and was lucky enough to take a company public to NASDAQ. And along the way, I didn't really know much about capital markets, but I had a lot of people in my life who wanted to invest in the IPO. They heard it was coming. They wanted to invest. And so ignorantly, I made a list. I said, I've got you. How much do you want to invest? And when I brought that list to the board, they said, that's not how this works. And I said, what do you mean? I've got like $1 million circled here. And they said, well, all the shares are already allocated to institutional investors. And that was kind of my inflection point where I realized, well, that's not right, because I had helped that company raise about $80 million privately over the first 4 rounds before we ever went public. And I remember the share price that the Series A investors were paying. And then I contrasted that with the IPO price. And I was like, okay, this is where real wealth is created the earlier somebody can get in. But the problem was that nobody ever could get in. They couldn't even get into the IPO, let alone the Series A. So I wanted to disrupt that, and I wanted to disrupt that at scale. And just kind of piggybacking on what Darren was talking about, there's massive information asymmetry between what is covered in the public markets on legacy financial media like CNBC and Bloomberg versus how the private markets are much, much larger than public, which most people don't realize that. And also, people want that action that, like Darren was talking about. They want to invest in things that historically they've been locked out of. Venture is one of those alternatives in the asset class. And there's others as well. The problem is there's massive information asymmetry. You can turn on, Bloomberg or CNBC and you can learn about stocks. You can, get analysis after Amazon does their earnings report. But how do you get into the highest growth startup that is, at $200 million valuation and growing rapidly? And if there were a network that were covering that, which there is not, how would you get access? So there's just this information asymmetry and this issue of access. And that's what we wanted to disrupt. And we didn't want to disrupt it in the way that you see financial media cover things, which is standard expert. Here's an interview, right? And now you watch somebody, some talking head, try to educate you on their opinion. That's kind of not what the next generation or the modern investor wants. They want to get to know the people who are behind these companies. They want to be informed and educated. They also want to be entertained. They need a brand voice that connects with who they are and where they are. And so that's what led to this business, this first franchise of Going Public. And Darren had an expertise that I did not have and still does. I like to say I've had a Darren Marble residency for the last 7 years, where he had this expertise in this new area of capital markets that finally permitted everyday Americans, in fact, anybody globally over the age of 18 to legally invest in startups. You couldn't do it before this new law went into effect. And so when I called Darren, I knew he was the right partner. It took some convincing. He initially turned me down, but I have a hard time taking no for an answer. And I eventually compelled him to say yes. And that was back in 2017.
I'm so happy, Darren, that you said yes to Todd, because this is so exciting. And I'm going to piggyback a little bit on what you just said, Todd, and flip it to you, Darren. So going public, I feel like is just the start, right? Crush Capital, you have mentioned, is building a broader media and fintech platform. Can you tell us a little bit about what the bigger vision is here?
The bigger vision is a studio model, right? And that wasn't the vision in the beginning. The initial vision was, let's create a show like Shark Tank where viewers can invest in featured companies while they watch. And let's have that show be bigger than Shark Tank. It's an idea whose time has come. As we financed that show and that vision, as we rolled it out, season 1 on entrepreneur.com, season 2 on Market Watch, now a deal with X, working with Linda Yaccarino, who's the CEO, we expanded the vision. And this is where I credit Todd. And we're very complementary minds and partners in this business. Todd is always thinking 30,000, 50,000 foot level. What's bigger than one show? A studio that produces a variety of interactive investing shows. What do these shows have in common? They're focused on the private markets. They are highly entertaining and exciting. They're highly educational and informative, so we can empower the viewer to make educated investment decisions. And they're all interactive. You don't just learn about companies. You don't just learn about deals. You don't just hear Mark Cuban or Robert Herjavec bicker with each other. That's the old model, the old format. You, the viewer, are the shark. You can click to invest and for $100, come into a deal in Going Public. Click to invest, come into a deal in Kingmaker. With Phil Hellmuth and Chamath for $500. So there's a variety of interactive investing shows that are in development beyond the Going Public series. Different talent, different celebrities, different formats. Some might be 5 episodes in a season. Some might be 10 episodes. Some might be one company per episode and it's a series. But those are the common denominators. And I think, this is a vision that likely can stand the test of time. We think of studios today, Disney, Paramount, Warner Brothers. These are businesses that have been around for decades, and they produce feature films. They produce shows. They have subscription businesses. They're global entertainment conglomerates. That's the vision for Crush Capital, is to be the studio of the future that produces a variety of highly entertaining and interactive investing content.
Love it. I love it. I feel like it's already so unique. And so then the fact that you're going to continue adding to it is even more exciting. I guess this is a question for both of you. How would you balance making financial media engaging while ensuring that the investment aspect remains serious and responsible, especially following the meme stock era?
I think the key to that, Jessica, is quite frankly focusing on the founder. And our thesis is that retail investors want to invest in who, not what. So kind of that theme of bet on the jockey, not the horse. And if you focus too much on the company and the metrics, and you dive into the financial statements and the customer acquisition costs and all those business themes, that stuff is important. Don't get me wrong. But what the modern investor really cares about is who. I mean, think about Elon Musk, right? What a legend. Do people know all the metrics behind SpaceX? Probably not, right? Most people, if they're lucky enough to get an allocation in a company like SpaceX, they're investing because of the founder, because of Elon Musk, right? And so if we carry that theme into our financial media studio, we always try to develop an emotional connection between the viewer and the founder. And there's lots of ways to do that happens to be wildly entertaining. If you take a page out of the Mark Burnett book and you look at one of the most successful business shows of all time, The Apprentice, when you really break down that series, you're watching really talented entrepreneurs, really talented business professionals operate outside of their comfort zone. And so you think, well, how does that connect to this business that they're the founder of that I might want to invest in? Because you're seeing the cloth they're cut from, and you're understanding all of the traits that are actually required to run a business successfully. Things like resiliency, stick-to-itiveness, the ability to overcome adversity, emotional intelligence. I mean, all of these themes can get expressed in this content, and you just don't see that if somebody's being interviewed on like Bloomberg, right? They're putting on a 2-minute certain, facade that they're the professional founder of XYZ company and they're talking about the metrics. There's a place for that. That's not our place.
And what I would say, Jessica, is as a corollary to Todd's comment is the shows are set up where the format is a profile of the founder. under stress, out of their element. But as you move from the top of the funnel into the middle of the funnel, you're on a landing page where you as a potential investor have access to the critical data you do need to look at the business from an investment standpoint as well. So part of the beauty of this industry is that it's a disclosure-based capital raise. The companies are raising capital using a securities exemption that's been in effect in the United States since 2016 called regulation crowdfunding. The short term is Reg CF. Billions of dollars have been raised by thousands and thousands of companies since 2016 using this capital raising tool. And one of the prerequisites is that you have to provide either reviewed or audited financials of your business to the market. They get filed with the SEC in a disclosure document called a Form C. It's not an S1, it's not a 300-page document, but it might be 30, 40, 50, 60 pages of data, of information, of metrics, of risk disclosure. So the middle of the funnel, you as the investor can see, what are the revenues? Has this company ever turned a profit? What are they forecasting for growth? How much are the founders paying themselves? All of these things that an investor does want to know, they're there in the middle of the funnel. And the companies can raise up to $5 million from anyone over the age of 18 globally. And all of those investors, all of the millions, tens of millions of people that will see this show are going to have access to the same base of information. And this is, through FINRA and the SEC, these rules are designed to protect retail investors. So we're big on compliance. But again, to Todd's point, if we lead with that data, that's actually not as exciting. That already exists. That format's been done 100 times. We think a reality show that's highly entertaining is a much more compelling hook as a starting point.
Absolutely. And you're just talking about the founders and how important that is. I've seen that you've had NBA All-Star Baron Davis, you've had Ninja, the world famous gamer. What makes a great founder for one of your shows, and what do you look for when selecting companies?
Well, that's an interesting question because not only do we have to source great businesses, because we feel like we have a fiduciary duty to any of our community members and viewers to source some of the hottest and highest growth and highest probability for success startups there are. But we also have to have interesting founders because at the end of the day, this is entertainment and people have to be interesting. Right. And I go back to maybe our first season where we sourced female founders, 2 female immigrant founders who moved here not speaking a lick of English in their teens. One went on to a Harvard MBA, the other a PhD in computational physics. They created a custom skincare company that leverages artificial intelligence. So you fill out a survey and it runs through a series of questions and leverages data from your zip code, things like the pH in the water where you live, the pollution, the air quality. Is it dry? Is it humid? And it custom creates a skincare regimen just for you. That company was compelling to us because of the founders, the overcoming of adversity, the fact that female founders rarely ever get the attention that they deserve, and the fact that they both went on to higher education and then created something really unique in the marketplace. When we met them, they had all those accolades, but then when you meet them and you start hearing their personal stories, you start finding the elements that makes a great founder. Right? Resiliency, always at the top of my list, right? That's one of the number one traits you have to see in a founder that I'm ever going to bet on. And there's other characteristics too. Can they communicate well? Do they have high EQ? Are they able to tell their story in a way that's compelling? Do they have a mission that you want to get behind? And can they communicate that? Clearly, having a drive. When you meet people who have drive, you don't need to explain it. You can see it, right? And not everybody has that. It's a unique quality. And then lastly, there's other qualities too, but lastly, I think passion and commitment. Like, do they know something to be true that others don't yet know? That famous saying, right? Do they know that? And are they committed and passionate about it? If we see that, they're checking a lot of boxes right there.
Love it. That story actually sounds so inspiring. And I'm sure people that are listening in are going to want to know what company name. Do you have it on hand?
Well, sure. That company is Proven Skincare.
Love it.
And they do custom skincare. They were in season 1. Ming and Amy are the co-founders, wonderful human beings, and the company has continued to grow and thrive, even moving into custom scents.
That's amazing.
Yeah.
Congrats to them. Congrats to them. If those are the type of founders that are on your show, then I'm sure a lot of people that are tuning into our podcast are excited to watch. Darren, I'm going to flip it to you. You've said before in recent interviews that investing shouldn't just be for the wealthy and well-connected. I was so inspired to hear that. Can you explain how Crush Capital and its media projects are leveling the playing field for everyday investors?
Well, look, I think in a nutshell, Todd and I are driven by a very, very simple belief or ideology, which is that customers deserve an opportunity to be owners. And specifically, customers deserve an opportunity to be owners before the company's public. So, if you look at companies like Uber, which, when they were public, multi-billion-dollar valuations at the time of an IPO, which is very typical now. Companies are staying private for 8-10 years. So by the time they get public, if they ever do, valuations are enormous. They're bloated. It's hard to make money as a non-accredited retail investor, as an everyday American, buying shares of a newly minted IPO at a $4 billion valuation, right? And of course, it's the customers of Uber that contributed to its growth. And yet the customers historically aren't allowed to invest while that company's private and growing. And wealth is being accumulated on paper by the seed investors, the Series A, B, C, D investors, wealth being accumulated by family offices, billionaires. They're already wealthy, venture capital firms, both in the US and internationally, high net worth accredited investors. Why shouldn't the customer be allowed to be an investor? Without the customer, there's no business. Without the millions of customers of Uber, there is no 10-cent round going to 30 cents, going to $1 to $2. It's the customer that is the foundation of the growth. And so we believe that the customers do deserve an opportunity to be owners. And what better way to allow them to do that than through a show like Going Public? That's going to be seen by 125, 150 million people coming May to X, and documenting the journeys of the founders and then, marketing that story to the world. So it's something that we fundamentally believe in. As Todd mentioned, that's where real wealth is created, right? That's where generational wealth can be created. We have an investor in our company, Cyan Bannister, that, she and her husband turned $50,000 as a seed investment in Uber into over $200 million at the IPO. And that's an anomaly. It's the dream angel investment. But Cyan is a contrarian. She believes, like we do, that everyday Americans should have an opportunity to invest. And at some point, we'll open up investment in our company to the public. So we're going to do the things that we're putting in the show for our own business in the future. And we think it's a very exciting future, and people demand access. We're going to give it to them.
I love that so much. You just totally hit it out of the park with that one. I'm excited to share that with as many people as possible, because that is true. I mean, there's so many different people that want to invest in these early stage companies that would never, ever get the chance. And so now you're giving them that platform. This is actually going to be for both of you. Entrepreneurship is at the core of Going Public and Crush Capital, which is fantastic. I know that you both have built and raised capital for so many different companies and investors, and you're just opening up this network for this new world, this new era of media, which is just so exciting to us. Can you tell us a little bit about what the most valuable lesson you both have learned about fundraising might be for that you think founders should know?
I can start on that. Look, I think when it comes to fundraising, Todd and I have today almost 90 investors that have backed our business.
Amazing.
Have cut a check, wired money. The vast majority of those 90 people leaned into the pitch, leaned into the deal right away in the first minute. And so I think one takeaway is that as a founder, you need to realize that the right investor leans in. The wrong investor, you're going to find yourself pitching really hard, selling really hard, following up over and over with the wrong people. And by the way, we're guilty of this too. 7 years into our journey, this happened to me yesterday. I was pursuing an investor very hard because I knew she was a $250K to $500K investor. Todd's like, Darren, there's some red flags here, man. I'm just calling it out. And, it's tough because as a founder, you want to believe. You want to believe everybody's your investor. And, maybe the first meeting goes good or you hear something. But the reality is that the right investors lean in right away. and they're already sold on your market. And there's buying signals. They'll say things to tell you they're interested. It's not rocket science. Most investors don't play the poker face. Some do, but most don't. They'll say things like, wow, this is interesting. I really like this. This is brilliant. They nod like this, say, wow, impressive. The wrong investors say, let's set up another call. Let's set up another meeting. I got to think about it. Send me your data room. Let me see this and that. Nobody's going to find a document in our data room which has 300 documents. There's not one magical document in that data room where an investor says, oh, this is it. I've been looking for this. Now I'm ready. So you have to learn the buying signals. They tend to be obvious, and you really have to focus on spending your time with those investors that lean in right away, and be disciplined enough to walk from the people that don't lean in on the first call.
I'll tell you a quick story, because I think it was pretty telling for me, pretty eye-opening for me. When Darren and I started this business, we had really a shitty sizzle reel that was with stock footage and a dream. Okay. We had the idea. We had put the idea down into a slide deck. We had put together a sizzle reel with stock footage, and, everybody could understand what we were trying to accomplish. And through a relationship that Darren had, we were able to pitch the show to CNBC, and actually to one of the chief executives there. And he said right away, I love it. I want it. Stop pitching. We're buying it. But then when we got into the documents, we realized, if we sign these documents, we'll literally have nothing. We'll walk away with nothing, and we'll have a good story to tell that our show made it to CNBC or didn't. Maybe it made it to a pilot stage. Maybe it got on the air, but we won't have anything to show for it. We wouldn't own the IP. We wouldn't really make much money. And at that time, we made the harder decision. We made the decision to raise the capital ourselves and go after it ourselves and produce it ourselves. And the very first investor that we met is a wonderful human being who has been successful in business, in banking, in tech. He's a billionaire. You would never know it by looking at him, but we got the meeting. So we prepped, man. Darren and I prepped for weeks. We had the deck. We had, hey, what if he asks this? How are you going to handle that? Right? Hey, I think you should say it like this, not like that. We practiced. We pitched, each other back and forth. We go into this guy's office, and that's the first piece of advice. Go, be in person, have a physical presence. There is no substitute for that. Zoom does not substitute that. Okay. So we went in, we sit down, we did our opener, very rehearsed, very solid, right? The first thing he says after the first minute, 60 seconds is, guys, stop pitching. I'm investing in you. That was a moment, right?
Yeah,
that's when you realize, you know what? It's never about the deck. It's never about the financials, the data room, the information that people can dig into. It's never about that. It is a judgment that is made very quickly by the investor, whether he or she wants to invest in you. So be you. I'm not saying don't have a good deck. I'm not saying you don't have a data room. Of course you have those things, but just recognize if you show up in person and you have all those qualities we talked about before that Darren and I look for when we cast for our shows, what we look for in founders: resiliency, passion, commitment, seeing something before everybody else sees it, emotional intelligence, ability to communicate well, right? Good eye contact, good presence. All of those things are being calculated in the first minute. And that's when the decision is made. And if you talk to some of the most successful investors in the world, they'll tell you some of the same things, right? I can see, and some of our investors are just amazing judges of character. They can see right away who the person they're talking to is. So always be yourself and recognize that that decision is likely being made in the first 60 seconds.
That's such good advice. And Todd, Darren, just so I'm sure you hear this all the time, but y'all actually embody those characteristics that you're mentioning with regards to your founders that are coming on going public. It's very, very obvious with what you're saying here, with everything that you're doing. And on top of that, I feel like you are both so incredibly bold, and you're ready, and you believe in what you're doing. And you've most likely have faced skepticism across the way. Can you tell us a little bit about what the biggest challenge has been in bringing going public and Crush Capital to life, and how did you overcome it?
I can start. I think, Todd and I formed this company in July 2017. We're here in 2025 and we are about to launch season 3, not season 20, over 7 years later. And I think the takeaway is that to build a real business takes time. You have to be willing to put in 10 years to build something real. And the average founder is not aware of that, nor are they expecting that, nor are they willing to do it, right? We live in a culture of instant gratification. We're desensitized. People are looking to buy meme coins for 1,000, flip it for 10,000. People want quick money, easy wins, get rich quick. Like that's unfortunately a part of the culture. And, but that's not what drives real business outcomes and real success. There's no AI chatbot that's going to rebuild our business for us overnight. Oh, now the AI is here. We'll just AI the business. It's a farce. It's a fantasy. You have to put in years and years and years of work to build something real. And I think Todd and I are incredibly stubborn. You have to be half crazy to want to go on this path because it's brutal. You are missing shots most of the time. Most of the time when you shoot the ball, you miss, you brick, it's an air ball, things go wrong. We've been through it. We've been to hell and back, and yet we're still here. And so I'm a firm believer in another simple idea. Resiliency is the key to success, period. You want to start a business? What's the number one key to success? Resilience. Do you need a good business idea? Sure. Do you need to have a product market fit? Sure. You got to go build some tech? Yeah. But resilience is it. And very few people actually have this because it's so brutal. It's so painful. There's so much suffering, emotional suffering, financial suffering, that the average founder is like, I'm out. I don't want to feel that pain anymore. Anxiety, depression, all of these things, like they hit very hard. And I don't know how solo founders do it. I admire them to the core. This business I couldn't run this on my own. Right. And I won't speak for Todd, but, I love having a business partner. When one of us is down, the other one's up, then vice versa. Like you need a founder that can support you and believe in you and believe in yourself. And you just got to stick with it because the longer you stick with it, you're going to win more. And then every now and then you're going to get a big monster win that changes the game. But our deal with X didn't happen in year 1, year 2, year 4. It happened in year freaking 7. And by the time we met with Linda Yaccarino and we pitched her this show and we showed her a trailer for season 3 and we had 2 seasons under our belt, she said yes in 2 minutes. But it was 7 years for that to happen. So it was a long, long road to get there. And now we're thrilled. We couldn't be, again, more excited, but you got to stick with it because it's a long game that you got to play.
Absolutely. Absolutely. And Todd, do you have anything to add to that as well?
To sum all that up, I'll just never forget. One of my mentors said to me, the secret to your overnight success will be your first 10 years.
Yeah, exactly.
And that's literally come true. And we're just getting started. The other thing that I think is important for people to understand and realize is that where you start, your original idea of your vision of how it's going to all play out, there's 100 pivots, maybe 1,000, right? And you have to be willing to be malleable and flexible. You always stay true to your mission, right? You have to be mission centric, but you also have to be the type of resilient where you're not so married to one way that like, if that doesn't work, everything breaks. You have to pivot. Right? Stay true to your mission, but you have to pivot. And I think the best founders do that daily, right? And there's different ways that is said. And I don't want to, be a cliche or anything, but you have to fail a lot and then you fail forward, right? And you learn from that. And those are all little pivots. And so the journey is not linear like this. And I would just close by saying, like, you have to enjoy the journey because every time you experience that pain, and there is a lot of pain, your skin gets thicker and it prepares you for the next pivot or the next valley that you're likely to be in. But, to get into that valley means that momentum is going to carry you over the next peak. And that's just how it is. So if you don't enjoy the journey, you'll hate it. And I think you learn to enjoy the journey as you go through it, because you realize all of these like hard hits, all of these blows that you take, they actually make you stronger, so that the next blow is like, it's just another thing. Just another thing to overcome. We learned something by that. Now we're going to pivot this way. Now we're going to rise again. And that's just, if you get used to that and you start to enjoy that, then it becomes actually exhilarating. That's how I like to look at it. And I echo Darren's sentiment in that, like, solo founders, I'm in awe of, because it's very lonely. And if you don't have a co-founder that you like, that you trust, that you can lean on when you're in a rut, I don't know how solo founders get through that. And I admire them tremendously for being able to carry on. They're really anomalies, I think. So I do recommend having a co-founder.
You two are just two peas in a pod as well. I feel like you both have, like you said, mission centric. You both have the same idea of where you want to be. And it's like, okay, let's get after it. Like, let's do it together. And whatever you need, I got you. Whatever you need, let's get it done. So yeah. I love to see that. And before we wrap up, are there any final thoughts you might have for founders, or perhaps people that want to follow in your footsteps?
I would, maybe I'll take that, and I'll be brief, because I think one of the keys is, don't build a business to fit into a silo because you think investors have a particular thesis around that silo, and so you'll get the backing you need. Build a business in the way that you're passionate about. And so for us, we created a whole new category. In the beginning, when we were talking to your typical venture capital firms, it was, well, are you fintech or are you media? And I would say yes. And for them, it didn't compute because they have their thesis and they only invest in this. And here's our silo, right? And do you check the boxes within this silo? And I say, well, yes, we check the boxes in that silo. We also check the boxes in this silo. Therefore, we have created a new category. And some of the biggest businesses in the world stuck to that mission and vision and built whole new categories. And then, of course, it was evident to everybody. But in the beginning, you get a lot of naysayers, a lot of bomb throwers. So stay true to your vision. Don't try to build your business in someone else's silo.
I guess my closing thought would be for first-time founders is you have to do the hardest work yourself in the beginning, meaning you have to be able to prove to the market, to investors, and ultimately to yourself that you can build and go from 0 to 1 with absolutely nothing, no resources, no capital, no head start. And I think a lot of first-time founders make the mistake of thinking, I'm going to launch a business and I need $1 million. I need $500,000. I need 200 grand. I'm going to go raise money and pitch investors. And if I have this money, I can go build something. The most talented founders in the world are doing it without that. They're doing it on their own. And so for Todd and I, it was, we sold entrepreneur.com. We got a distribution deal with a big media company that has 20 million monthly unique visitors, signed a distribution deal for season 1 of going public without having a show. We didn't have a proof of, we had a sizzle reel. And then we were able to raise money. That, by the way, took 3 years. We were doing 3 years of thinking about what do we need? How do we start this? So I think that's what an entrepreneur does. An entrepreneur is a magician. And the magic trick that you learn to do over and over again is create something from nothing. For us, it was a distribution deal. For someone else, it might be a prototype. For someone else, it might be a partnership, an AI algorithm. You have to do that. Otherwise, you're not really an entrepreneur. And so to me, that's the core of the definition is be a magician, create something from nothing, focus on execution and nothing but execution. Then the money will come to you.
Love it. You both are so inspiring. Thank you so much for joining us today on Communicating Capital. It was a pleasure to have you.
Thank you, Jessica. It's a pleasure.
Thanks, Jessica. Take care.
Thank you. And for our listeners who want to follow Crush Capital and check out season 3 of Going Public on X, be sure to visit goingpublic.com for more details. We, of course, will have all the links in our show notes. As always, thank you for joining us.